Recently, my friend Lou actually did a video mentioning that property prices will fall, and it's actually in reaction to Minister Lawrence Wong's mention and confirmation actually that when our property lease of 99 years expires, whether it's condo or HDB, it will be returned to the state. I'm doing this reaction also because I'm living in a place that is a 99-year lease, and everybody is kind of affected, correct? Because if this is not handled properly, then would Singapore property markets really downward spiral? And as you know, if it does, that will create a lot of wealth destruction. Long story short, I think that is very unlikely to happen. So in today's video, I'll be breaking down this discussion in 3 key parts. The first, I'll be explaining how the Bala curve actually works, and in particular also rules relating to loans, understanding this Bala curve. The second, I'll be sharing with you case studies of the oldest HDB flats in Singapore. I went to do some research and actually found 2 estates that will be first impacted before you. And last but not least, I'll discuss on solutions. Maybe some of them are already considered by HDB and government. Let's be constructive, and with that, let's roll in the intro video. Hi guys, welcome back. Without further ado, let me show you what this Bala curve actually means. The Bala curve is actually a lease decaying scale, whereby at the start, a leasehold is almost priced the same as a freehold. And gradually over time, because the lease gets less and less, there is a discount factor all the way to 0. But again, when we hear 0, don't get stuck on that, because there could be some ways property advertisements might do fear mongering. Then on the flip side also, don't be so beholden by freehold property holding its wealth. As you know, a property's value is impacted by a lot of things such as its location as well as its upkeep. Freehold properties have a premium, and that's why you realize usually the rental yield is lower. If you're investing only for 5 to 10 years on a private property, you would realize that maybe a leasehold might make you even more money. But back to this curve, let me add in some other parts to break this up. First, I'll add in the orange area, whereby the lease remaining is 60 years, and right at the bottom, the last 15 years, which kind of falls off a cliff. To this point, the first thing to note, the drop is actually not that steep in the orange sector. This drop, this cliff, is only after the 15th year, whereby 40% drops very quickly to 0. So don't over focus on the red sector. And the 2 arrows I'll be there are relating to today's case studies, which is in Jalan Batu and Circuit Road. Let me put up this estimate of leasehold table. On the right hand side, those are usually newer properties, correct? And lease decay actually happens already. It's just that we don't quite notice it and we don't see any fear-mongering advertisements relating to them. But in the middle, many Singapore HDB estates are in this state right now. But I'll let you look a bit closely. The per year value drop is only 0.5 to 1%. Not off the cliff, even if you're left with a lease of 37 years. So don't scare yourself. My own previous HDB flat, which is in 1984, I sold it with a gain also. That was after surviving the downward property trend of 2013-2018. So the overall property sentiment still impacts more than the lease decay. So once you understand this, you realize that on the left hand side, which is boxed up in red, the drop can be quite substantial. And that's why there are many loan restrictions. But the more important loan restriction is this for CPF usage on HDB flats. If you like to use the maximum of your CPF, do buy a flat that can cover your age until the age of 95. The simple rule of thumb, your age plus 4. Which means now I'm age 41, I must find a HDB flat that is 45 years maximum. Then I can use my CPF fully for it. There are still a lot of choices, and that also explains why there are still record prices for seemingly old flats. This Bishan Maisonette with 61-year lease left, which is 38 years old, sold at a record $1.5 million. Quite obviously, the person buying this is not a newlywed young couple. It's probably a retiree that downgraded. But again, 61-year lease is very long. Do you know that in Hong Kong, the leases are 50 years? And in China, the leases are 70 years. And do you know for industrial properties, 61-year lease is actually very long. Most of the properties that our REITs own are between the 30 to 45-year range. So all is not lost for owning an old property. The definition of old is very subjective. And to dispel that, I've prepared the next chapter, 2 case studies. Let's start with the first one, which is Block 2 Jalan Batu. This is a 1969 built HDB, which is 56 years old and 43 years remaining lease left. From a first quick glance, you realize that property price has not gone to 0, correct? In fact, it's been pretty steady. I've drawn 2 lines over there. which is from 2013 to 2020. The prices did drop because property prices have came down in general. I don't think it's too much of a lease decay factor. But then when markets picked up, that put the property prices higher than the lease decay factor. And that's why it seemed to be trending upwards slightly also. A quick glance, you will find that there are some previous owners who actually made profits buying, staying in this property, and then eventually selling them recently. So if you own a HDB flat that's younger than this, again, don't be too worried about all those advertisements or fear-mongering that you must dispose your HDB flat quickly. Not true. Second case study, an even older HDB flat at 65 Circuit Road. This one over here is 1967 built, 58 years old and 41-year remaining lease. And I've drawn two arrows also. There is a trend downwards because property prices have came down in general. Again, I don't think it's too much of a lease decay factor. But when property markets went up, you realize that it's gone up also. The main thing is, of course, in the last 12 years, it couldn't make a new all-time high. This then could be because of 12 years of lease decay. But as you can see, the selling price for this is only low 300,000. How to find a HDB flat, 3-room flat that's 300 plus thousand in today's market? Very difficult, correct? And if you own one of these flats currently and rent it out, say you fetch $2,800, whole unit rental. Do you know that your rental yield could be as high as 10%? No joke leh. You have made back your capital renting out for just 10 years. Who cares so much about lease decay? Which is what actually industrial properties or commercial investors do to make monies on properties. My main message from this chapter is that firstly, we have not seen a very steep decay factor even in our oldest HDB flats. They are priced very cheaply and rightly so, but from a rental perspective, they could be worth also a lot. And also, unlike private properties, old HDBs are very well maintained. Like what you can see on the beautiful walls of 65 Circuit Road. Private condos, it really depends on sinking fund, conservancy charges, and whether the committee is strong enough to repaint buildings. Coming to you, if you've learned something really, smash the like button, press on subscribe, especially discuss thorny topics like this on property and especially on wealth building. Thank you very much, and let's move on to the next chapter, which is on possible solutions. To understand what could happen, let's look back at a cluster of landed houses in Geylang, whereby 190 of them saw their lease expire and return back to the government. Yes, it is true, lease expire means zero value. That catches the headlines. But what I'd like to reiterate is that the government has found alternatives for all 190 of the houses. Nobody is left in the lurch. And if you think about it, if people do not have alternative housing, it will become a big societal problem, correct? Election results, of course, going to be affected, correct? So don't overthink that there's no solution. It is very likely that government is testing solutions really. The simple reason is because most of our HDB flats, especially the older ones, are built in the 1970s to 1980s period. There is something new that could be piloting, which is the voluntary redevelopment scheme that could be piloting in 2030 with flats in Marine Parade, Bedok and Ang Mo Kio among the first to undergo this pilot test. These houses again are from 1972 to 1975. So if you own one that is way younger than this, look at what's going to happen and don't worry first. If it is executed beautifully, you would know that there is a solution. If it's executed poorly, you can guess that there's a lot of time to fix things. One thing for sure is that our government will not leave this to the last minute. This is something very important to many Singaporeans, and it's very likely they will find a solution before many batches of HDB flats reach their remaining 15 years of lease. So if I were to guess how does this relocation of a lot of people is going to happen, it is possible to sell back to government and accept a relocation, just like how en bloc is being done. If you sell only a 50-year lease to government, the value of property will be less than a fresh lease, correct? And the solution to that is quite simple. A trim older lease will probably only fetch a 2-room new lease. In this way, we are trading away space for a fresher lease. And that could be also why there's a lot of BTOs now built that are 1 and 2-room flats. It makes a bit more sense, correct? To protect your value, do not outlive your property, than to have so much of space. At least there's an outlet in this VERS. For those who don't have a 2-room flat, they could also explore elderly retirement villages with shorter leases. This is Kampong Admiralty, and there's 100 homes built, and applicants must be age of 55 onwards. In this way, it's a mass relocation of people with still a shorter lease because this is 15 to 35 years. All in all, when our population starts to relocate, we can guess that the government will usually use its grants to fill in any gaps, correct? For someone who is low income, simply give a big relocation grant. In that way, no one would be left behind. Just like how we handle GST or CPF MediShield Life price increments, selected groups get a bit more grants to help them with the transition. This ties into my last point, which is when there's possibly more housing grants that need to be given in future for relocation purposes, could that mean that property taxes have to go up? This is just simply balancing the books. If you're going to give up more money, you have to tax more. And who to tax? My guess is again through the wealthier segment of our population. What we can see is that property taxes have been rising, particularly those who own bigger private properties. This jump was announced on 1st of January 2024, which means also, if you buy a landed property, it is very likely that you'll be paying more taxes down the way. But my guess of where the biggest jump is going to be is from non-occupier tax rate. This is when you rent out properties. When government needs to charge for more tax revenue, inching this up will have the least political pressure. Which means also, if you own 2 properties and rely on property rental income for your retirement, it is likely that the property taxes for this will get higher. That is my guess, and as always, let me know in comment sections what you think. And let me introduce you to this previous video I have, which is my story of selling my HDB flat. If you haven't seen it, check it out, and I'll see you there too. Take care as always, goodbye.